Hello and welcome back. Crypto making a strong bounce this morning, but I do think it is too early to get excited about a return to October that a lot of people have been betting on the futures market. Also, PayPal apparently have been printing money from thin air. So we're going to get into that as well in just a second. But first of all, let's jump in here and take a look at the market this morning. So currently $108,125. We had a nice move up through the local highs that were formed in this kind of low volatility region that we put in yesterday. Those highs were at $107,500. Broke up through that quite nicely and came back to retest, and then we managed to move away and actually just break this last high from the downtrend in at $109,252. So we reached a high of something like $109,500 this morning before selling back off, and now bouncing off that former high at 107,500. So that is your former resistance turned support. If we take a look at the liquidation map, you can see over the last 4 hours, longs losing out just a little bit to the shorts, 57 million versus just 10 million short liquidations over the last 4 hours. Over the last 12 hours, pretty much balanced, okay, 80 million on both sides of the market. And then over the last 24 hours, slightly heavier on the short side. And once again, same old story, people getting excited about relatively small moves to either side of the market in the micro sense, jumping in on leverage, and then being swept out and used as liquidity for the other side of the market. So where we are right now, actually on the daily, slightly more long liquidation risk in the market than there is short, and we are slightly closer to where that is stacked. I think key points to look out for here are going to be the $106,500 mark. And that is just at the lows of this tight, low volatility range that we put in yesterday. So what that tells me is, once again, clearly a lot of people have seen this breakaway and they've gone long and they've placed their stops around these levels. Their liquidation risk is also around these levels. So that's something to watch out for. I wouldn't be surprised if we had another dip into liquidity. I explained in my last couple of videos that I've seen basically a cycle forming here where it's the same playbook we've seen again and again, right? People jump in on leverage at the smallest sign of green shoots and then get liquidated. And those loops are tightening and tightening and tightening as people run out of money, as people get less and less excited about the prospect of this just ripping up and continuing into a face-melting October. And the market gets more and more demoralized. We are now in a 30 on the Fear and Greed Index. And those people run out of money and they stop having the guts to borrow money to get into those positions, and they stop being able to borrow money to get in those positions, and that's why these loops get tighter and tighter. And all the while, the short side of the market is building and building and building. So if we look at this on the 30-day time frame, you can see we're up at something like $5 billion worth of short liquidation risk, and that is coming in at a price of just $120,500, not a million miles away. So at a certain point, we're going to reach kind of capitulation, most likely, where it no longer makes sense for big players to hold back because they can see this stuff to it, and no longer makes sense for big players to bully the market because there's no one left to bully. And then it makes sense for those bigger players to come in and sweep up with big limit orders and start buying up Bitcoin heavily on the spot market. Or at least the theory goes, right? We could very well enter a bear market, but I don't think we're quite there yet. We know the macro environment is there. We know that just recently we were breaking all-time highs, right? It was about a week ago. If we take a look at the ETF flows, we haven't looked at this in some time. Let me just refresh that. You can see moderate to heavy outflows towards the end of last week, $530 million on the 16th, just $100 million on the 15th. We actually had an inflow day on the 14th, and then a somewhat smaller $323 million outflow day on the 13th. But we know that ETFs are just a tool that institutional investors can use to get access to the Bitcoin markets without actually holding Bitcoin themselves. And those players can sometimes behave in such a way as retail. Very important to remember. CZ from Binance pointed this out, or CZ from Binance pointed this out. When you see these numbers, this isn't Fidelity buying Bitcoin, okay? It's not Bitwise buying Bitcoin. It's not ARK buying Bitcoin. These are ETF products. These are products hosted by these companies, by Fidelity, by Bitwise, by ARK, etc., which allow institutional investors to buy Bitcoin. So when an institutional investor comes along and buys into the ETF, the ETF has to go out and buy Bitcoin in order to back that, right? It doesn't necessarily mean that the fund is buying Bitcoin. We do know in the case, particularly of BlackRock, they also buy into the ETF to get exposure via some of their other funds. But that's kind of a different story, kind of an outlier in the lineup here. So yeah, nothing to be terribly concerned about here. No massive hectic outflow days. The market, as I said, has been pretty low volatility compared to what we've seen over the last week or so. But once again, wouldn't be surprised if we slipped a little bit further from here. I don't think that would be out of place at all. There's plenty of long liquidation risk again. People still have money to throw at this, apparently. That is peaking out at the area that I'm interested in, $106,500. That is worth about $270 million of long liquidation risk. And on the micro sense, be aware we are closer to the stack of long liquidation risk. Although, again, nothing like we've seen over the last week. Okay, I don't think the liquidation risk is as high right now, unless something out of the ordinary happened. But always expect the unexpected. And then to the upside, we have broken this key level. I think this high up here is probably more significant. But if you are measuring a technical downtrend, if you want to do it that way, you can say high here, low here, high here, lower low here, lower high here, lower low here. So we've technically broken out of that downtrend, but not particularly convincingly. So the next key area to the upside is going to be this $112,000 mark. And actually, just to keep things fair and balanced, $112,000 on the short side is worth about $350 million worth of liquidations. So there we are. I'm still in my position. We are still underwater. Ooh, look at that. $5,350, mind you. Still underwater, but once again, I maintain I'm perfectly happy staying in that position. If we saw another nice little sell-off to the downside, I would even consider adding to that still. Just as a reminder, I'm long from a rather high average price of $114,600, but we got into that on limit orders because we basically saw the possibility of this big sell-off that resulted in that massive $19 billion liquidation event. But in other news, take a look at this. PayPal's crypto partner mints $300 trillion worth of stablecoins in a technical error. It's just a technical error, nothing to worry about. Everyone relax. PayPal's blockchain partner Paxos accidentally minted $300 trillion in stablecoins in an internal transfer on Wednesday. Paxos stated that it immediately identified the error and burned the excess PYUSD in a social media post. And look, we can actually verify this on Etherscan, depending on what you want to say. So you can see here, how is it? Okay, transaction action. $300 billion worth of PYUSD, or actually $299 trillion worth, were mistakenly minted by Paxos. 7 have since been burned. You can see the transfer here, right? Look at that. But I think what is important about this is that it brings into question a really big part of our infrastructure. A lot of people were really excited when PayPal was able to issue stablecoins. Just a reminder on the legality of this. First introduced to the Senate on February the 4th, 2025, the bill overcame procedural hurdles to pass with bipartisan support in the Senate in June 17th of 2025. And this is Trump's Genius Act of 2025, stablecoin legislation. And one of the key points of this is permitted payment stablecoin issuers must maintain reserves backing outstanding payment stablecoins on at least a one-to-one basis, consisting only of certain specified assets, including US dollars and short-term treasuries. Paxos and PayPal do not have $300 trillion US dollars in order to back up $300 trillion worth of PYUSD. It would require more than double the world's GDP to do so. They did rectify this very quickly, but we've seen massive issues in the past with stablecoin issuers. Luna, for example, caused the entire massive contagion crash. Now, of course, Luna was not backed as an algorithmic stablecoin, which is part of the problem there. But around the same time, we also saw USDT depegging. I think that went as low as $0.85 or 85 cents to $1 US dollar, which of course is not a one-to-one. And that really does bring into question a big part of our infrastructure in this industry. It's all very well making it law that stablecoins have to be backed one-to-one by dollars or by treasuries at least. But if a technical error could cause a massive minting of $300 trillion worth, then obviously that is not necessarily always going to be the case. It's not always going to be the case that these stablecoins are backed. And that is worrying, okay, for all sorts of different reasons, if nothing else, just the simple breaks in trust of what a stablecoin is supposed to do and supposed to be. But the good news is we didn't see any sort of massive market reaction to this, but something to pay close attention to, of course, because we have seen that in the past and things have been very, very bad when this has happened in the past. In summary, Bitcoin breaking out to the upside. I don't think we're out of the woods yet, and the reason is as simple as it's always been: leverage in the market, liquidation risk in the market. Still sitting in my long position, still down just about $5,000 right now, but I'm very comfortable in that, and I'm in fact looking to add to that if we see nice stabs to downside to pick up some more buy side liquidity. So that's it. That's all I've got for you right now. Thank you so much for watching. Please remember, nothing I say should be considered financial advice. This is purely my opinion, shared just for entertainment purposes. But thank you so much for watching. Plenty more to come. Catch you in the next one. Bye.